In this video, I want to show you what professional traders actually do when they trade, what technical indicators they look at, and how they use technicals on top of fundamentals to time their trades. I worked on the London Stock Exchange for over 5 years, and we would use these indicators every day to truly understand what the market was doing before we entered into a trade for the client. This video will show you the basics and show you what the best tools are to read a cryptocurrency trading chart so that you can hopefully make more money. I make helpful cryptocurrency videos and updates every day, so make sure to subscribe right now to keep up to date. And I'll also leave the timestamps for this video in the description so you can get to the part of the video you need. If you want $30 of free Bitcoin, simply use my code for the Celsius Wallet app when you download it on your smartphone. Enter that code when you sign up to get $30 free Bitcoin. Info in the description. First though, before we start trading, we need to choose a system that gives us all the professional tools we need to trade like an actual pro. I use Binance to trade most of my crypto, and Binance gives us TradingView completely for free when you have a trading account with them. Kraken also has very good charting software, but overall, I use Binance more because of the low fees and choice of other services. I'll leave a link to Binance in the description box if you want to sign up for an account and follow along. So then let's come to Binance, and I'm just going to get straight into the charting software. If you want to know how to use Binance, how to sign up, how everything works, I have a separate Binance tutorial. You're welcome to go and check that out. I'll link it in the description. We're going to come straight into the advanced trading software and get stuck into the chart, what everything means, and I'll go through all of the indicators and important things that you need to know as a beginner. So firstly, with Binance, there's actually some different trading views. You can have original right here, but I'm going to click on trading view. It gives us some of the professional tools that we need to use. You can already see that there are some lines and some technicals on here that we can use. I'm going to get rid of these first so that we can start with a clean slate. To remove any technical analysis that you have on the chart, you can come over to this left-hand side and then just click the X and that will be taken off. Right here, you can see a couple of indicators called MA. MA is moving average, and then it gives you an amount. On the right-hand side of that, you can see 50 and 99. A moving average is a simple smoothing calculation done by taking the closing price of the cryptocurrency over a certain period of time, in this case over 50 days and over 99 days. It smooths out the moves of the chart and gives you a moving average of the closing prices. And this is the first very fundamental thing that traders will use to really give them an idea of how the chart is moving now in comparison to how it's moved over the last 50 or 99 days. But you can choose any time frame that you want here by simply editing this. You can come to the settings menu right here and it's going to come up. You can very easily change this, go to inputs, and then you can change the length of the moving average. So you can change this to 100 days, 200 days, 5 days. When I was trading professionally, I would usually look at the 50-day, maybe the 99-day, and then if the chart was actually not moving too violently, I'd probably look at a 20-day moving average as well. Some traders use moving averages for a price action. So for example here, you can see that the 50-day moving average actually moved way above and crossed through the 99-day moving average right here. This would suggest that short term, the price action for Bitcoin was actually very bullish because people were moving the chart and the price very quickly to the upside. And this would suggest that the price was in a very bullish territory, and you can see that has played out. Moving averages though are a very simple indicator overall and really are a basis just to show you how price action is moving now as compared to in the past. We're actually using a candlestick chart for the Bitcoin US dollar chart. So let's go through this. We can see that up here, we are trading BTC against US dollar Tether. US dollar Tether is a stable coin. It tracks US dollar 1 for 1. So what we're trading here is Bitcoin against US dollar, which is the biggest market in cryptocurrency and is what Bitcoin is valued in. When you see it valued at 58,000, it's valued in dollars. So here is the price, and this will change on every single trade. Either up is green or down is red. So you can see the price here. This will be changing on a constant basis. Then you can see the 24-hour change of this cryptocurrency market, and we know that this is Bitcoin market. So we can see over the last 24 hours, the market is up 0.5%. We can then see the 24-hour high and 24-hour low. So we're actually sitting above the 24-hour low and just slightly below the 24-hour high. This information is cursory and just gives you a very quick overview. It's not really that important overall, apart from to give you a quick overview of how the price action has been over the last day. Now what we can do is choose the type of chart that we're using, and certainly I want to use a candlestick chart. You can come over to the chart settings here and you can actually choose this to a few different ones. You can use bar charts or you can use a line chart. Now if I switch this to line chart, you can see that the chart changes. This is just simply a plotted line of the closing prices of the cryptocurrency, and it simply gives you that information and nothing else. There's no real trading information with this chart, so professional traders will unswervingly use candlesticks or some version of the candlestick to give them actual trading information. Let's just zoom in on the price here and we can see what this information gives us. Firstly, you can see green candlesticks and red candlesticks. Each candlestick is a period of time. It could be 1 hour, it could be 15 minutes, it could be 1 day. Whatever that time period, there is a starting and an ending point for the candlestick. If we take this green candlestick right here, the starting point, the starting price was this level. So it started at this price level here. And let's say that this candlestick is an 8-hour time frame. At the end of this candlestick, the price was up here. So it moved from this level at 38,776 and finished at this level, 46,425. That was a positive or upward price move, and therefore the candlestick is colored in green. If we take this red candlestick, it is the opposite. The price at the start of the time period was around 54,000 and at the end was around 48,000, a downward move during that time period, and so a red candlestick. You can also see some lines that come up from the candlesticks too. This is intra-time period trading. If you can see this very small candlestick here, it's a green candlestick, so we know during the time period there was an upward move in the price. The starting price was right here because that is the start of the colored in portion. During the time frame though, the price actually came all the way up to this price level. That was the very top of the trading range during the time period, but at the end of the time period, it didn't finish there. The price at the end of the time period was actually at this level, which is where the colored candlestick stops. This is very important trading information if you are a beginner to understand. This is called a price action, and it tells us something very important about the trading for this time period. It tells us that there was a huge buyer in the market pushing the price up during the time period, but towards the end of the time period, that buyer either disappeared or there were more sellers coming into the market pushing the price down during that time period. It's important to know this because with this sort of price action, you can actually try and predict what will happen in the next time period. We can then come to the next time period here and you can see it was a red candlestick. It's only logical that if that selling occurred during this time period, it could also carry on into the next time period for the candlestick. And in fact it did, and it actually moved lower during that period. You can use this information on a short time scale or even a long time scale to really understand when to time your trades. If we look to an upward movement, we can see a huge sell-off in the price of Bitcoin down here, and it reached this level. But you can see that that level was actually pushed upwards, and this candlestick actually ended from a low position up into a higher position, even though this sell-off occurred and it still was red. As a trader, you could suggest then that there were buyers coming in at this price level, pushing the price upwards. And so you could potentially use this as a level where you would enter into a trade as a buyer if you were indeed a buyer of Bitcoin. So you can see with candlesticks, you can use them to actually enter trades. It happened again here. The price moved right down to this level. Buyers came in during this time period and pushed it up. And therefore the next time period, those buyers continued and pushed it up further. We cannot predict the future, and so we don't know what will happen over time with the price. And that's why we need to look at a couple of other factors. Firstly, timescale, and secondly, trend lines. So let's first come on to timescale. I'm just going to zoom out of the chart right here and we can look at timescale now. You can see you can change the timescale of the chart to whatever you want. I'm using a 1 day here, but you can change to 4 hour, 1 hour, or even 15 minutes. If you want to day trade Bitcoin, then I would suggest looking at the 15-minute chart. When I used to trade for clients, I would usually look at the 15-minute chart. I know some people do like to see a 5-minute chart. For me personally, I don't think it gives me enough information. The 5-minute chart trades on every single tick, and the price movements are so small, it just doesn't give me a good feeling of how the actual overall market is. And so I don't personally like to use the 5-minute, and I like to use the 15-minute chart to get a better idea of how the actual price movement is of the cryptocurrency or the stock that I'm trading. This is up to individuals though, so definitely try it out and see which time frame you're most comfortable with. I do have a separate video on a crypto day trading strategy. I'll link that in the description if you want to go and watch that one after you've seen this video. When I'm looking for good price levels to actually go and buy some cryptocurrency though, so not day trading, but more like setting a price level for an investment, I'll definitely look at the 1 day and have a larger overview of how the price is trading. So for this tutorial, I'm going to be an investor and I'm going to look to pick up some Bitcoin really when the price is coming off so I can get it a little bit lower. And we've seen a couple of very heavy pullbacks. We saw a pullback here and we saw a pullback here. But we can come and draw some trend lines on this chart and see if we can get an overview of where we can actually enter into a trade. Even though the Bitcoin chart has been outrageously bullish and almost unchartable because of the crazy moves to the upside, it is actually still showing some very typical indicators to us. Bitcoin is obviously in an upward trend. It's in a bullish market right now. And we can see a really typical trend right here with higher highs and higher lows. So we can see a huge move to the upside, bringing us to this level, and then a healthy pullback towards the 50-day moving average. When the price hit that 50-day moving average, the price then rocketed again and made a much higher high, as you can see here, with a corresponding pullback once more to around about the 50-day moving average. Even though that pullback occurred, the pullback was at a much higher level than the previous low. In fact, the pullback and the low was even higher than the previous high, suggesting an outrageous bullish market in Bitcoin for right now. We can then see the move further, creating a new higher high and a pullback that hopefully will come once more to the 50-day moving average. As a trader and an investor and someone who wants to pick up Bitcoin for the long term, I would really be hoping that this chart comes back to the 50-day moving average once more, as that is certainly an area that I would like to pick up some Bitcoin and not pay these high prices here, but wait for these pullbacks. It can be very difficult to enter into price movements on this chart. I'm just going to switch this to the 4-hour, which can give you a better visual idea of how to draw trend lines. So let's start with these trend lines. We can go on the left-hand side. We can very simply click on this right here and then draw these trend lines on. So firstly, what I'm going to do is just zoom out a little bit on the chart and try and get a trend. So let's see the trend that we can get. And what I want to do now is to connect at least 2 major swing points in the chart. This isn't going to be perfect and no type of analysis is, but let's try and do this. Bitcoin is in an uptrend as we know, so I'm going to try and connect 2 points in the chart to see what we can do. I'm going to increase the time frame overall and see if we can connect 2 points of the chart. And you can see it's actually very difficult because of how violent the swings are to the upside. But let's say here to here, and we can try and actually create this line and connect those 2 major points in the chart to the upside. As an investor then, you would always try to pick up the cryptocurrency in a bullish trend when it does revert back to these levels. That's because the cryptocurrency price does seem to be bouncing off these levels as it's moving up. This isn't perfect as you can see, and no chart will trade absolutely perfectly towards trend lines. And you can see that actually the latest pullback got nowhere near this trend line. What you can do then is actually draw another trend line on the chart and actually draw a trend area instead of a trend line. So let's draw another trend line on the chart and we can draw that right here. You can actually move these around to make sure that they do touch the points as perfectly as you can. But what these 2 trend lines are doing now is actually giving us an area where the price might come rather than a specific line. So as a trader, you could say, if the price comes within this area, then I may look to pick up some Bitcoin if it's in an uptrend. The whole point of drawing a trend line is to give us a rough overview of where the chart might be, but definitely we can draw a range where we want to pick up some Bitcoin rather than just one single line. If we now zoom out and see this trend line, we can see what's happening here. You can see that if you do use this type of analysis, that actually it's better to buy in these pullbacks, as you just get a higher percentage chance of getting an upward move sooner and then getting you in a profit position sooner. If you're buying on FOMO and you're not looking at this and you're buying at these highs, then what may happen is that you get these pullbacks, and it's never nice to see a 4 or 5% reduction in your purchase straight away. Bitcoin is in such a big uptrend that it's not even mattering at the moment. You could have bought in at this high, and as long as you didn't sell anywhere here, then we got an even bigger move to the upside around here, and it would have put you in profit. But the way that investors really trade is by waiting for pullbacks, waiting to a reversion and a downward move of the price to just get a better average price for their investments. I certainly don't want to buy Bitcoin once at a price and then hope it just goes well for the future. If I'm looking to consistently put in money over the long term into Bitcoin or any other cryptocurrency, then I will do better to wait for these pullbacks, because on average, over a longer time period, I will be getting better prices overall than paying up at these prices, because we can always have slight moves to the downside as well. And picking up the crypto when it is in a pullback is definitely advantageous. That really is the basics though of reading a cryptocurrency chart or a stock chart or any other type of currency chart. You have candlesticks, which give the best information. You then have some moving averages and trend lines you can draw like this, connecting 2 or 3 main areas, and then maybe giving yourself a trading range where you may want to enter into a position. The other important thing to note is volume of trade, which is down at the bottom. The volume of trade is super important, and professional traders do look at the volume as much as the price movement. If a price movement happens along with a large amount of volume, that indicates a relative amount of strength in the price move. So for example, what you see very often with cryptocurrencies is that the price moves off from highs like this, but that is often accompanied by a reduction in trading volume as well. That means that the price is essentially dripping off. Investors are just not buying or trading as much, and so the price is coming off very slowly. But if you see upward moves accompanied by high amounts of volume, as we can see here, a huge amount of volume traded, and that is green, so it's definitely a positive move. That is a very bullish sign that when buyers do enter into the market in big amounts, the price will move up. Conversely, if there is a lot of volume trading to the downside, then you can obviously foresee that there are a lot of sellers in the market and the price is going to move downwards. In general though, as the price of Bitcoin moves up, it does actually accompany a lot of trading volume, which again is bullish for the price and has been bullish for the price for many months and years. But of course this could change, and so we always have to look at the charts, see what the trading prices are telling us, and also see what the volume is telling us. This is the absolute basic level of reading a cryptocurrency chart. There is so much more to talk about here. That would be a 10-hour video though, but definitely subscribe if you want to see more videos like this. Technicals are often thrown out the window if something happens in the news or a big announcement occurs, so just to keep that in mind. In any case, if you want $30 of free Bitcoin, you can sign up for Celsius Wallet using my sign-up code. I'll leave that in the description. I use Celsius Wallet to keep a good chunk of my Bitcoin because I can earn a 5% investment yield in the wallet on my Bitcoin. Check that out and all the other helpful videos and resources in the description. Make sure to subscribe if you want daily cryptocurrency content, and I'll see you in the next one.